All right, SPY. We see we definitely had some intraday action. So this is a bearish engulfing pattern. I mean, it has engulfed. You could call it engulfed the entire body, but there's some. When you see a pattern like this on a daily, you need to break down the intraday because these candlesticks, a lot of them, you have to credit to Steve Nissen. If you don't know the intraday action of them, then they kind of don't mean anything. So what we had today, if we look at a 15 minutes, that we had basically almost well, not a gap up, but it got above yesterday's highs and then rolled over into the close. So when you look at a candle like this is definitely a bearish candle. If it proceeds to break down below this low, again, you'd have to be aggressive because you could say, I know we've been talking about it for a while, and I said that I would look for something kind of like this, to get more to the upside and then look for it to then repeat a down move. So again, if you're aggressive, this might be something that you're looking to short right now. I would wait a little bit personally, but again, it's not a matter of, this is not for trading advice. It's just to kind of just give some ideas or some different patterns. But you do have the lower high if you could get a follow through and break. So what we want to make sure is that we see some follow through actually to below this level. So if you look at the 15 minute, you want to see it break below this level and of course below yesterday's low. And then you can say, because you don't want this to be capitulation and then a gap up to like here, and then you're kind of stuck, even though you should be having your trigger on a break below this low or maybe this low. I would just use this low, quite honestly, stop above there if you're looking to get aggressive. But you can see that this just been churning. And as far as the price action, it's kind of cool. Well, what I find is actually really good is when people say, I don't really know where this market is going. That's one of the best things a trader can do, to say, listen, sit on my hands, because a lot of stuff hasn't been following through. And if I'm trading breakouts or I'm looking for some follow through on some swing trades, I'm not getting them. So that's the best to say, listen, let me let the market figure itself out. I'll wait patiently. And then when it does, I'll jump back on board. You gotta remember, you have to have a strategy in place that that you're not going to miss trades, because everybody says, oh, I want to get in. I want to always be the one. So they might short this to get, a little rip to the downside and then pops back up. You got to say to yourself, listen, I don't have to be the first out the foxhole. I don't have to be the one that guesses the top. And that's what will save you in this game. QQQ, this doesn't look bearish to me at all, quite honestly. It just looks like, again, it's churning the price action movement. But as far as the trend goes, the upper trend is still in place. So that's something to be aware of. Because again, this could rip to the upside. It's just slowly been creeping up here, and volume has been kind of but it's not looking bearish. IWM, this is the weekly, so we can see it's testing this 50-day, but this is definitely not a sign of strength if you look on the intraday time frame. So we're going to go to the 15-minute, and you can kind of see that it was just really choppy. You got a lower high, and again, I don't have to be the one. So let's say you're looking at a price pattern of a descending triangle. I don't have to be the one that gets the break, because the break might be, you see how it broke this time, and people might have tried to play it. I mean, maybe the pattern wasn't there, but just hear me out at the time. So the break out and then continues to up. You don't have to trade the break. You can say, listen, I have lower highs in place. It breaks below. It's going to give you another opportunity to get in. And if you look at the volume on the pullback, then that's what can really give you a better setup versus just trying to catch every move. The diamond. Again, this is, it's given a lower high. This is something that you just got to be careful with, because this could look weak, because, it came up to these previous lows and then just tagged it and ripped to the downside. So again, it's looking at that intraday action to say, okay, on the 15-minute, it came, it failed breakout, gave a lower high, another lower high, and then ripped to the downside. So we want to see if this has some follow through. If it has some follow through with increasing volume to the downside, but some people might say, listen, that's increasing volume at the end of the day. It typically always happens. Touche, I understand, because it happens, in the beginning and typically at the end of the day. But we need to see what the price action is going to do tomorrow to really, see how this one's going to play out, because you don't have to take this one. Okay, you do have this lower high, and if it's going to rip fast, it's going to rip really fast. So you just have to be cautious and go from there. Excuse me. This price action is really high, actually. I think it's up 20%. So Twitter, again, if you played this to the upside, congratulations. I don't play into earnings, and this wasn't giving me anything on a higher time frame to really say, oh, you know, this is really sexy. Maybe you say the higher low, but I mean, you got the whole lower high here, you got the higher low here, and the lower high there. So you basically got a pendant that's basically forming, and those aren't really fun to trade. Keeping it about as real as I can. So again, I want to see it pop out, and if you can get a gap up and go, then it continues to go. Facebook, let me talk a lot. I actually watched CNBC, which is probably the worst thing I could have done today because I was under the weather and I didn't trade. But again, it might come fit. Don't short right here. I wouldn't, people see these gaps and get really excited about it has to fill a gap, because it could fill a gap and then rip to the upside. This is a bullish pattern. This is a pendant pattern. I would have loved to get in here and then just pretty much be selling profits going into this action, because I think this is just profit taking, and then it has more legs to the upside. You have Yelp. Yelp is not looking too strong right now. Again, the price patterns are the same. The price patterns are the same. If a pendant and you don't know where it's going to go, you leave it alone. You wait for the price. You don't have to be. Excuse me. People always say, I trade S&P, I trade this, I trade that. Well, what happens if it doesn't give you a trade? You could give people your money. You could go to Vegas regarding doing that, because if you're looking for something forcing trades, then that's going to be some of the hardest trading that you'll ever had in your life. Banking sector, a couple names don't look good. I mean, Goldman Sachs does look good. It looks like it has a flag setting up now for more upside potential. But if you look at the sector, it doesn't look that good. It's just really, really choppy. And this is the price action you don't want to get caught up in, because it could be very frustrating, especially if you're holding options. You might have a little bit of decay that is, wearing your stuff out. Bank of America actually doesn't look that good at all. You have the lower highs in place. Again, I would wait, because you have this level here, and then you have these lower highs as well here. So again, I would wait for a break and then continue down. If you're looking to get it now, you know that you have to put your stop above this high. And if you feel comfortable with that, that's cool. But you have to understand what you're doing and say, okay, I'm going to put my stop at 15, 75 or something, and I'm good with that. American Express, same thing. Gave it, this pattern was just really crappy. Just, you didn't know where it was going to go. Gave a couple lower highs and it's continued to the downside. Again, this might be a chase or something if you're looking to get in here, because if you break here, you're not looking to get your stop above there. You're looking to get your stop above there. And you got to look at where you think it's going to go. The proper risk management. Please watch my profit managing video. That's something a lot of people don't talk about. Risk management is always talk about 1-2%, but profit, risk reward for what you're getting, per trade, is something that's actually a lost topic. JP Morgan, again, this one is trading sideways. Just got to see what it's going to give you. Again, if you trade the breakout, you're getting squeezed, and this is the reason why I don't like trading them. So if you excuse me, if you got in around this area, maybe you took profits off here, and then you can see where it goes from there. So again, sorry for I'm under the weather, but if the SPY and all the indexes are not giving you something you feel comfortable, stand down, stay in cash position. Take care.